Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm just going to go over some random things in the commodity sector, show you guys what's going on, cover the index itself, maybe go over some ratios, look at a whole bunch of different things, and give you my opinion. I know that I've gotten some people sending me either comments or things on Twitter about the housing market and sales not being as robust as a few months before. And guys, housing is seasonality. There's seasonality in the real estate markets. They go flat to lower over the winter months. It's completely normal. We have very low inventories, and in fact, sales would go down if you run out of homes to sell. That's why sales are going down. There's no homes to sell. The inventories are so depleted, and that I think that prices are going to continue to go up. We are in an expansionary phase in real estate, and that's not going to change overnight. This is a Titanic that's moving and it just doesn't turn around. And I don't know why other people on YouTube don't figure this out. Because they throw all this stuff out here. They're trying to call a market top. And guys, markets don't top when you have inflation flinging out the bunghole. These guys are printing so much money. It's ridiculous. And the floodgates are open, guys. We don't have the inventory. And I'm going to show you a couple of charts here. I'm going to go over some things and probably give you some more of my opinion. And my opinion is derived from the markets. It's derived from charts. It's derived from data. It's derived from inventory numbers. And all you have to do, if you guys are worried about your investments or you're worried about something, go look at the inventory. If whatever you're invested in, look at the inventories. I mean, we're going to have a problem in oil. I feel like we're just going to walk into the biggest crisis that we've ever seen in oil for some reason. And everyone else is saying, oh, it's fine, don't worry. Guys, we're not investing in oil. And when you don't invest in oil, decline rates will become a realization. It will decline and decline and decline until you get more investments. So it's not a matter of, hey, we're going from 90 something million barrels a day to 103 or something, or 110 some years out. What I'm saying is we may be at 100 million barrels or 99 million barrels a day, and we're dropping. Like, we're going to 90, and demand's going to 100, over 100 plus. Now, I don't know the exact amounts. But I can tell you this. I don't think OPEC has the capacity that they say they do. And every time they say they're going to pump more doesn't come. So that, to me, I'm getting a little bit scared. Because if a major problem happens in the supply demand, which we've never had in the history of any of our lifetimes before, we've never had a deficit in oil. We've always had spare capacity somewhere in the world. If we run into a spot where we don't have spare capacity, I don't know what that means for price. You can blow things out of the water. Look at natural gas and what happened there. I think it would be very similar to that. Maybe we see $1,000 a barrel. I don't know if we're going to get that high. That's not a projection. I just don't know what happens when we hit a deficit like that, and if a deficit like that is in front of us. A lot of people talking about renewables. Renewable this, renewable that. Well, you know what? Renewables don't put fuel in a car. We don't drive electric vehicles at this point. And I don't think that electric vehicles are going to dominate if you have mineral shortages of all these other things. So my paradigm, my viewpoint, my investment strategies are around energy. Because I think energy, it's messed up. It's something screwed up. And if you're anywhere else, you're going to be a victim of the energy crisis, not a benefactor of the energy crisis. And the way that I'm playing it is I'm overweighting energy type things. That's uranium, oil, and natural gas, because that is really what's hard to replace. And then any sort of solution has to travel across copper, rare earth metals, and some of these other things that they want to transfer into. That's where the money, the ESG money, is going to go into that stuff. So the way that I'm playing it is directly in energy, and then I've got some money in the tertiary things in terms of rare earth metals, copper, and stuff like that. And I hardly have any money in the renewables themselves. It's very, very small. And I question it every single day because if the commodity prices of all these things rocket higher, they literally will price themselves out. I don't know what alternative there is then. The alternative is to drill, baby, drill. And the oil service companies, I think, are also a very good spot to be looking at. So I've deployed a lot more money into the oil service companies. I'm adding into those with charts that look absolutely fantastic. So I've added a lot into the oil energy, I should say the energy service companies just in general. So that's been my strategy here just recently. My strategy for 2022 is to acquire more energy service companies. And I've been adding in quite heavily. End of 2021 and in the beginning of 2022. That's where I'm focusing my new money and all my capital. If there's energies there. And I also beefed up a lot in the fertilizer because if we have food shortages, they're going to need fertilizers bad. And I went into Intrepid Potash a lot heavier than I was. So I added more into that, and I have Mosaic. Those are my two plays. But looking here, and I've got it pulled up. We've got the TRJ. This is the CRB index, and we're breaking to the upside. The patterns here, it's capitulation move to the bottom. Capitulation move means that we had all these sellers. It was a bottom to kind of blow everything out. And now we're moving on up. This here is the recovery phase of real estate. 2008 peak, and then the recovery phase, which is a consolidation pattern. And then we broke the consolidation pattern to the upside, meaning that we have a new expansionary phase of real estate coming, and commodities are signaling and verifying that. So we have a nice big move in the CRB index. And looking at the housing starts, I've got the housing starts here. Here's your average going across. I put it at about 1,450,000 or so. We are in an expansionary phase going on up. We're at about 1.7 million-ish is where we're at. Whenever we get above the average and go into an expansionary phase, that's when commodities start going crazy. So we have that alignment. The alignment's there. We have no inventory of homes. They're very low. Sales are going to drop because we have no homes to sell. And prices are going to continue to go higher. And inventories are going to fluctuate at very low levels. Just because they increase a little bit doesn't mean that they're going to just rocket higher. We have to get about 6 months of inventory for home prices to actually have the chance to fall. So we are at very low inventory levels in the housing market. Higher prices. Higher prices means that they're going to kick on the housing starts, and people are going to have to buy new homes because there's no other option. We need more homes in this pool of homes. And it's going to have implications. It's going to have higher interest rates. Now I'm looking at interest rates at the moment, and interest rates are going up. They're up another 3%. And we're in this inverted head and shoulders on the interest rates. There's the inverted head and shoulders. And we're breaking out on the right-hand side here through that downtrend line. And we're breaking quite viciously. Good, strong break. So interest rates are going higher, just like I thought they would. And I'm not trying to make predictions, guys. I'm just saying what we generally see is we see the housing market, the real estate market, the inventory gets eaten up. Rent prices start to rocket higher. We've seen that. Now we're going to see the home starts start to go up. We're seeing that. Everything that I've said on the channel over the past year, if you guys have been with me, expansion phase of real estate, higher rates of inflation, higher interest rates is what usually follows. And then you're going to see all of these commodities go like mad. And that's kind of what I'm expecting. And it looks like it's playing out that way. We are monitoring it every single day. Now, the dollar has been strong. And I don't know if that dollar is going to get weaker. If that dollar gets weaker, precious metals are going to roll. We'll see everything across all these markets go up for us. And that's when it gets really fun. And we've got, gold's up today, platinum's up today, silver's up today. The 10-year yield's up and the dollar's flat, a little bit lower. This is going to be this dollar here. We've been watching this thing play. It's coming on up. It's doing that return move upward, and then we're going to see it, I think, go down. Not 100% sure, but that's what I've seen in history. I've seen a weaker dollar under these market conditions, but I will say there's a lot of inflation worldwide. Does that mean the dollar has to go down? I don't necessarily know that answer. I think we could have a massive move in a lot of these things with the dollar index remaining somewhat strong because of the inflation that's being released to the system everywhere in all of these different currencies. So everyone's going to be running towards commodities and precious metals and all these things. So we're just there first. We were kind of at the party by ourselves. We were chilling in the corner. Yeah, it may not have been as much fun as you'd want it to be. We had to ride through some volatility going sideways, but that's what you do. You buy things when they're down, you buy it when it's cheap, and then you wait for the money to roll in. So we're looking at all this. And some of the plays, I'm going to go over some ETFs, just kind of touching on them. Something like a SILJ might be something you might want to look at, but it still looks like it's got some time before a huge break. Same with GDX. GDX, kind of put it in logarithmic here. That one's got a break. It's kind of coming down, and you know what? You don't wait. You just buy it and you hold on. You don't sit here and try to time things to the nth degree. The moves are going to be so big, it's not going to matter when this money starts rolling over. XOP has done very well, and this thing looks like it's ready to break. So if you guys are looking at something to look into, XOP is one that I would be looking into. I loaded in XOP in my mutual fund 3rd of January because that's when I could. I loaded into this baby because it was ready to go. It is prime. Another one, OIH, looks absolutely fantastic. Coming up into the corner here, it looks ready to go. We just got to get a little bit higher before the break, and then we're going to see this thing launch like we've never seen before. We have problems in oil, guys, and natural gas. We have problems. We can see it in the pricing in all these different markets. Asia has problems. Europe has problems. Coal has problems. We have problems in energy. This is an energy crisis, and I don't know how these companies are still this cheap. It makes no sense to me. None at all. So, you know what? I'm going to buy them and take advantage of it. Screw it. It's exactly what we should be doing. URNM looks absolutely fantastic. Guess what I did? I bought some. First chance I could on 3rd of January, loaded in. Sure, I'll take some shares. That's all I can do in my mutual funds and ETFs is all I can do in my 401k. So that's all. They just opened it to ETFs in 2022, and I was thankful for that because URNM was still down. And this could still bounce a little bit, but man, this is we're in an energy crisis, guys, and the uranium to gold ratio is stupid cheap. And let's pull up some ratios here, guys. This is I can't fathom some of this stuff. Well, here's another one. We'll go through this real quick since I'm here. Copper's about to break out, guys. I bought a good chunk in copper here yesterday. When I had the first chance, I bought into COPX, REMX, URNM, and OIH and XOP. I loaded in, boys. I'm ready. And if when we break this, it's going to be gone. Copper's going to be the one that they're going to try to hit. And I don't see how copper prices are going to stay down. It's going to fly. And then we got the CRB to S&P 500, the index, the ratio. It is still looking very attractive and is very low. I am completely dumbfounded how this has not moved even higher than what it has, and we've had some massive moves in commodities. Platinum to gold ratio is favorable for platinum to move higher. It's coming. Palladium is still holding on to whatever gains it has, but I think platinum will eventually take that, and platinum to silver. We're at the low end here. Platinum, I think, is going to outperform silver in the beginning of this commodity bull market for the first couple of years, and then silver is going to take off like a raped ape, I think. It's kind of, and these are just guesses, guys. I don't have the crystal ball, so what I do is I invest in silver and platinum. I do all of it. If it's cheap, I own it. Platinum's ridiculous. That's like the cheapest of all of everything. It is ridiculous. It is one of the best stores of value at this moment in terms of its pricing against other assets. Absolutely ridiculous. I don't even know how it got this cheap. But you know what? It is this cheap. It may remain this cheap for a little bit, but I wouldn't bet on it for lasting much longer. Up to you on what you guys want to do. But when looking at the platinum chart, what it's doing is it had a consolidation period. It broke to the upside, came back for the return move. We all know on the channel what a return move is and what that looks like, that back test. And we're doing the return move right now. This is the daily candlesticks, and we've got some big buying pressure and smaller selling pressure. What do you think that's gonna? What do you think that's gonna do? It's gonna go higher probably. And remember, I don't know the future, but down here is a good spot to be, I think, catching whatever ounces you can before it goes up. This is kind of a last move. Scrolling on down here, we've got REMX. This is the rare earth metal fund. What we've got is the booty bottom, the booty here. Usually you've got a downward movement, a sideways movement, and then you have an up movement. This is going to be a big upward movement. We could come easily all the way up here and surpass these highs. It's going to take some time. It's not going to happen overnight. Not claiming that. You might see this thing be quite volatile as we ride up. But we've broken the booty bottom, the bottom booty. We've broken this trend line. That's the important thing, and we're starting to work our way higher. So you're probably going to see a big move. Now, lithium, I don't know what to do with lithium. This looks almost like a head, shoulder, head type deal. I'm not exactly sure. Maybe it rockets higher. I'm still confused on that one. COPX looks absolutely fantastic for a potential move to move on up here, but it's got the booty bottom as well. Downwards, sideways, boom. And then we've got this huge consolidation period, and then we're going to see a massive move higher. Why do I think that? Because they're going to try to solve the energy crisis with renewables. Renewables are going to suck every single piece of copper we have off the face of this earth because we don't have enough projects in progress. Copper is going to be a big bet, and it's going to be an easy bet, I think. So I'm betting quite heavily on copper doing very well. Scrolling on down, we've got stuff like, and we'll look at it here, lumber is being incredibly resilient here, and it just keeps moving higher. We have to build a lot more homes. I suspect lumber to be quite strong. This was a fluke. It's just a fluke. Nickel's got a big bullish engulfing pattern here. It's probably going to go higher. It's looking quite strong. Palladium's looking strong at the moment. I still think this is the out of favor metal, and I'd rather play it with platinum. Cocoa futures, I mean, we're just increasing these lows. They're starting to come up. So cocoa futures are looking good. Wheat futures are looking good. They're strong. Soybeans are strong, and they're moving higher. Corn futures are higher. Copper, higher. All this stuff is higher. So what am I looking at? I'm looking at fertilizers, something like an IPI. You start seeing these large downtrend breaks, and this thing looks good to eventually work its way higher. Same with ADM, Archer Daniels Midland. This will be one that's going to work its way higher over time. This looks absolutely fantastic for a very big move. And Mosaic is another one that I've got money in, a decent chunk. The consolidation period from last commodity bull market, and then you're going to see a big old move higher. Big old move. Projected move is 160 bucks or something like that. If you want an ETF, here's Moo. I don't own anything in Moo, but this looks really good to head on higher. I think another one, let me see if I can find it, was Wood. I think that was a Wood ETF, potentially. I think someone was talking about it. Can't find it, but something to do with lumber. I think it was Wood or something like that was an ETF that you might be able to play if you want to play the lumber. The way that I would play it would be HOV, because it's got the biggest pattern I've ever seen in my life, and a descending wedge type pattern that's broken to the upside. So that's one that I am playing with some money. I wish I had put a lot more, and I saw this at the bottom of 2020 at like $6. Absolutely ridiculous. Should have bought that. That one was my bad that I missed out on. So that's what I've got for today. I've been looking at all this stuff, and there's some other things too that I'd like to talk about. Maybe I'll do another clip on it, but that's what I've got for today. Hopefully you guys like this analysis. Give me a thumbs up. Subscribe to the channel if you haven't. But those are the ones that I'm playing with mutual funds and ETFs, or I should say ETFs, and what I'm looking at, and everything looks good, guys. I don't see anything that stands out saying that we should be worried about anything. So the money's in the system, the inflation's here. We can see it in all the charts. So CRB index, I think, is going to do quite well in commodities in 2022. So thanks for listening. This is Finding Value.